Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. U.S. stock market, IGV software breakout, late-day volatility, and tech levels. This video presents a direct informational narration of the source document. On May 29, 2026, the four major indices, excluding the Russell, largely moved up, driven primarily by a broad rally in the software sector. Microsoft recorded a 5% gain, marking its largest single-day jump since April 2025. Meanwhile, the IGV software sector ETF surged over 6%, crossing its 200-day moving average for the first time in 4 months. The source notes this price action points directly to a classic short squeeze.
Here is the agenda. We'll cover the late-day market rebalancing, the software sector breakout, key software technical levels, special situations with SpaceX and IBM, and finally, options market extremes.
Section 1. Late-day market rebalancing.
In the final 30 minutes of trading, the market experienced a significant distortion. The document details this as a purely mechanical phenomenon rather than active institutional buying or selling. This was driven by two structural forces. First, there was an estimated $14 billion pension fund equity-to-bond rotation. Because equities had a strong month against weak bonds, pension funds were forced to adjust their portfolios. Second, the MSCI Global Standard Index rebalancing occurred, involving 49 additions and 101 deletions in the ACWI index. This structural event forced massive, immediate position adjustments for passive funds post-market.
Excluding this mechanical rebalancing, the true daily price action was mathematically more muted. Adjusting for these flows, Microsoft's stated 5% gain was actually roughly a 3% gain. Similarly, NVIDIA's stated 1.45% decline adjusts mathematically to roughly a 1.1% gain. The source concludes that we must exclude that final 30 minutes to understand true daily performance, as those closing prints do not reflect fundamental market sentiment.
Section 2. Software sector breakout analysis. Looking closer at the micro-level catalyst, the IGV software ETF surged over 6% across its 200-day moving average. However, the data highlights that on a weekly basis, IGV has been climbing for 7 weeks and has reached a highly overbought level. The weekly RSI hit 79, a condition not seen since November 2024. The daily RSI reached 82.6 on extremely heavy volume. The document identifies a critical resistance zone strictly between the 101 and 107 marks. Successfully breaking that 107 ceiling would signal an extraordinary upward extension fueled by continued short covering.
Based on these highly overbought metrics, the analysis maps out clear technical scenarios. First, if the index fails to break the 107 resistance, it is expected to remain range-bound between 86.4 and 107, finding support somewhere between 90.1 and 94.8. Second, successfully breaking 107 adds significant momentum. Third, breaking the 109 to 111 zone points toward potential new highs. The source indicates that buying at current market prices without waiting for the 107 test presents an unfavorable structural risk.
Section 3. Key software technical levels.
Reviewing heavily weighted software constituents, the analysis identifies a stark bifurcation between stocks trapped under dense resistance and those breaking out. For the names facing dense resistance, precise target zones are mapped out. Oracle faces resistance at 232 to 24x and 272 to 283. Palantir targets 151 to 161 and 175 to 192. Salesforce is looking at 180 to 190 and 204 to 21x. Intuit is at 346 to 364 and 375 to 390. App targets 617 to 660. Adobe faces multiple resistance zones starting at 235 to 264, 273 to 309, and up to 322 to 358. Finally, Microsoft targets the 498 to 516 range, though the analysis assigns less than a 20% probability of it clearing that level without a pullback.
Conversely, there are specific standouts showing limited to no overhead resistance. These cybersecurity and software names include SWD, FTNT, and DOG. A notable standout recorded in the source data as Nice Now cleanly broke the 120 level, with a next target in the 143 to 157 range. These specific stocks are recording new highs and lack immediate historical resistance pressure.
Section 4. Special situations. SpaceX IPO and IBM.
Shifting to isolated market catalysts, we have the upcoming SpaceX initial public offering.
The preliminary S-1 filing has been submitted, pending the upcoming roadshow and final prospectus. The known parameters emphasize analyzing valuation metrics, market consensus, and operational finances. Importantly, the liquidity impact of share lockup expirations must be tracked, as these will dictate post-IPO volatility and potential liquidity extraction from the broader market.
Regarding IBM, the stock registered a technical breakout to 297. The analysis contrasts its slow-growth core business against the high-risk, long-term venture capital potential of its quantum computing division. Because quantum computing is still far from full commercialization, the document stresses it should be evaluated strictly through a long-term venture framework rather than immediate fundamental metrics.
Section 5. Options Market Extreme Positioning.
Zooming back out to the macro level, the document identifies a historically extreme positioning in the broader options market today. S&P 500 call option trading volume has hit an all-time historical high. The data shows that 70% of newly opened contracts are call options, compared to only 30% for put options, indicating a highly skewed and historically extreme ratio. The source concludes with a structural warning regarding this extreme one-sided positioning. When bullish bets reach this level of historical extreme, the structural risk of a violent market reversal, triggered by these one-sided bets, becomes highly elevated.